It's the 13th of February. Things are looking green, but I wouldn't celebrate yet. So let's have a look at the crypto market. We look at Bitcoin. We had a little bit of a rally up yesterday, which was strange, especially after the CPI print coming in bad, and then a full-blown rejection of the 55-day EMA. This isn't looking good, and this looks like this could and potentially could continue today. We have to be careful. We have the PPI coming out today. That will give confluence to what the CPI data is going to do. Again, the levels are the same. 93,500 is the mid-wick fill strategy. It still holds between the 91 and 89,000 is the next level, and the level below that is 85 and 82,500, and the absolute worst case scenario is 77,800. Now we will see how this works out today, but I have a feeling that it could potentially try and test this area here. We'll see if the PPI comes in good, we will see a rally, but at this present moment things are a bit iffy in the market, and because of one very specific thing. That is the daily volume of exchanges. We've seen that we put another low and it's reducing as the days go by. This is not great. Low volume pushes for manipulation. It pushes for market makers to move the coins. And what this kind of pushes towards is a further downward pressure. We'll see PPI could change that a little bit, but at this present moment, this is all pointing towards a downward move. Let's see. We look at USDT dominance. We've seen it tap that 4.65 several times. That is the area that I pointed out in several videos. You should definitely watch those as well. This mid-wick strategy is working perfectly fine. And with the confluence of the 200-day EMA, it looks like that is an area of strong resistance. Now, it's come down, but it's slowly laddering down. This area here is going to be extremely important. The reason why this area is so important is because it's at an area of confluence. The upward level of this channel, which is area of support, there's the downward trend line support, and this 21-day EMA is coming here. If this area holds, then we could have some more problems and downward pressure, but it looks like it could potentially come down, tap down, and we will see what happens there. Watch that area extremely carefully. It's at the 4.4%. We look at Bitcoin dominance. It's again come and tapped the area of the reversal that we stated many months ago. It's hit it perfectly. There is a spinning top we talked about, and there's a further continuation of Bitcoin dominance. This should potentially push altcoins up, which we're seeing in the bubbles that we saw in the beginning of the show. But what is looking like is, again, there is an area of resistance here, that this level, this support level here, is not good. This support level could mean that this could have a further continuation up to the 62.9. Who knows? But if it breaks down from here, we're going to see a mini alt rally. I have a feeling that it might come down there. I think it's almost definitely going to come down there, because we see a bit of a fair value gap in this area here, which is coming, and it's coming to try and tap that area. We'll see how much further down it'll go. I got a feeling that this 21-day EMA area is going to be a bit of a support zone. We look at total market cap. We see it go down and have a deviation and come back up, but it is looking weak. The market is looking weak at the moment. The total market cap is not growing, and it should go up, but I have a feeling it might come down and try and tap that 2.98 trillion mark. We'll see if it can reclaim above these two EMAs, the 55 and 21 day. We're good. Ideally above this neckline at the 3.3 trillion mark would be the best bet, but we'll see where it goes from there. We have to see where the PPI comes today. It's going to be extremely important. We look at others, and others are really struggling. It's way below the downward trend line, the breakout, which looked great, and everything was looking great for the crypto market. By the way, others is the crypto market minus the top 10 coins. It's come down, and this price structure here, this price action here, looks like there's further movement down, so alts could suffer a bit more. So my understanding of the market right now is that there's very low volume, open to manipulation. We see that how the price action is not moving towards what we would expect it to be. A high CPI print should have tanked the market aggressively, but it went the opposite way, which meant that all these leverage shorts that people put on that news are now trapped. Now, we'll see what happens. This could potentially cause a short squeeze, because I'm sure that the amount of shorts that were put at that time were astronomical. It was astronomical. The problem is that the lowering amount of exchange volume means that these market makers have far more control over the market. We do see that USDT dominance is coming down, Bitcoin dominance is coming down. All these things are good positive things, but also the fact that there's low volume can counteract that. We will see today PPI is extremely important. That will give confidence to the CPI report. If it's positive, we could see a rally over the weekend. If it's negative, we're going red for quite some time. Anyway, I'm Alvarez, 7-figure crypto investor. Like, follow, share, and I'll catch you guys later. Peace.